to Marcus Carlson. No word yet on what those retaliatory financial sanctions out of Moscow might be, but we do have a little bit of a clearer picture of what Crimea's financial future could be.
You're right there, Francois. Russia says that all troops loyal to Ukraine have now left Crimea. At the same time, Moscow has also approved of its first financial aid package for the region. The annexation of Crimea is likely to cost the Kremlin dearly. Russia said earlier this week that it would spend almost $7 billion this year alone. The local Crimean economy is facing a range of challenges, but the prime minister in the region still says that he believes in an economic boom. Jennifer Lush has more.
Russia's flag flies alongside Crimea's over the Simferopol parliament. Bitter over what it calls Kiev's long-term neglect, the region is convinced its economy will fare better with Moscow as a partner.
We expect an economic boom, economic growth. Unfortunately, as a part of Ukraine, Crimea was a region where the rates of development and per capita income were below average.
Several challenges lay ahead. 85% of Crimea's energy supplies come from Ukraine, and in theory, Kiev could switch off the lights at any moment. Moscow has promised to put an end to this dependence by helping to build gas-fired power stations and possibly linking the peninsula to Russia's grid. But that could take years. Another hurdle, currency confusion. For the moment, prices are being marked in both the hryvnia and the ruble. But different banks, shops and restaurants are displaying different rates.
There will be a period of adjustment and businesses will suffer because of the links between the Ukrainian and Crimean economies.
For everyday Crimeans, the change isn't necessarily a good thing. Officials have warned prices will rise up to 30% with the introduction of the ruble.
It's difficult because we don't know how our paycheck will change once we're paid in rubles. Will it be more or less?
The biggest burden, however, will be borne by Russia. More than half of Crimea's $540 million budget was expected to be financed by Kiev. Simferopol will now be looking to the Kremlin to come up with those funds.
Some corporate news next. BlackBerry lives on to fight another day. The Canadian smartphone maker has reported better than expected fourth quarter results. BlackBerry lost $423 million, but analysts say it could have been a lot worse. The company continues to lose ground in the smartphone sector, and for the first time since 2007, quarterly sales fell below $1 billion. The results are fueling hopes, though, that the new chief executive, John Chen, is turning the company around. He seemed to be transferring the company's focus from hardware to services. Now, we've seen BlackBerry stocks first trade higher and then lower over on Wall Street, and that takes us to a closer look at the stock markets. And American consumers hiked up spending by 0.3% in February. That's seen as a relatively strong figure, and that is helping shares in the United States. As you can see this hour, we're seeing the Dow Jones Industrial Average up by around about 0.5%. Markets are also getting a boost on hopes of economic stimulus in both China and Europe. That's a story that we're going to look at in just a moment. First, though, let's take a look at the European close. We saw indices on this side of the Atlantic close in positive territory, with the Frankfurt DAX up almost 1.5%. Mining shares in particular were higher on hopes that China's demand for minerals will pick up. Now, let's take a look then at why investors seem to be believing that there could be stimulus in both China as well as in the Eurozone. Investors, they're hoping that the threat of deflation will trigger action from the ECB to boost the Eurozone economy. It follows Spain reporting its first fall in consumer prices in more than 4 years. Spanish prices were down 0.2% in March. It seemed to raise the prospect of the Eurozone heading for a deflationary spiral. That, in turn, is seen to raise the pressure on the European Central Bank ahead of a monthly policy meeting next week. And a statement from China's premier is also helping markets globally. Earlier this week, Li Keqiang said the government was preparing targeted measures to help the economy. It comes at a time when the Chinese economy seemed to be cooling, and analysts say China's government wants to show that it is ready to act if necessary. Let's talk you through a few other stories that we're following for you, and the first one has a distinct China theme as well. China's president has overseen the signing of a string of deals in Germany. Xi Jinping arrived in Berlin earlier as part of a European tour that took him to France earlier in the week. This Friday, he witnessed a new €1 billion deal between Daimler and a Chinese partner to ramp up car production. And if we stay in Germany, pilots at the flag carrier Lufthansa are set to walk off the job 3 days next week. A union called for a strike on Wednesday, Thursday and Friday as part of a long-running pay dispute. Lufthansa is calling for talks to avoid the walkout. It was already hard hit this week when ground staff at Germany's airports went on strike. And shares in Intesa Sanpaolo were higher even as the Italian bank unveiled a €5.2 billion quarterly loss. The lender's bottom line got hit by a write-down of €5.8 billion altogether. That includes charges for bad loans that are at risk of not being paid back. Investors see the write-down, though, as a sign that the bank is cleaning up its balance sheet. It comes as European officials are preparing a health check of European banks later this year. And finally, if you're in the market for a second-hand luxury car, look no further. In a bid to crack down on government waste, Italy is selling off a total of 151 cars on eBay. The cars include BMWs, Jaguars and Maseratis. The sale is seen as an attempt by the Italian government to show that it is responding to pressures to cut spending. Overall, though, it's unlikely to make a huge difference. Italian public bodies, they own a total of 60,000 vehicles, and apparently they cost around €1 billion each year to run. OK, that is the business news for now. I'm not really sure if you are in the market for a second-hand car, Francois.
I'm just curious what government official needs a Maserati?
But you've got to travel in style, I suppose, if you're a prime minister or any other minister for that matter.
All right, many thanks for that, Marcus Carlson, with more business news later on here on